Hey investor friends, I'm Michelle Markey. Are you wondering if the stock market has bottomed and is there a new bull market underway because some indices like the Nasdaq have regained 23% from their June lows? So it makes us wonder if a new bull market is already happening or if it's just a head fake and it's a massive dead cat bounce along with being a bear market suckers rally. And I've gathered 14 signs that attempt to guess at whether the stock market has actually bottomed. And I'll tell you the tally of which type of sign actually outweighs the other one in guessing at whether the market has really bottomed. So according to these indicators, we can try to guess which one we think has more weight than others. And you can also let me know if you've come across other kinds of signs that point to whether the stock market has bottomed. Feel free to let me know in the comments. And if you appreciate content like this, I hope you'll like and subscribe to my video and YouTube channel because I'm trying to figure out investing as much as you are, and it helps out my channel tremendously, and I greatly appreciate it. So let's get into these signals. And while it's no surprise that most people have felt bearish throughout 2022, one contrarian indicator that suggests that yes, the stock market has bottomed is the AAII Investor Sentiment Survey, which peaked in its bearishness in the week ending April 27 this year. And the last time it was at its highest bullish reading was all the way back in November 2021. So the fact that we may have reached peak bearishness at the end of April and the fact that it's becoming increasingly more bullish since could be a sign that markets are starting to feel pretty good about where they could be headed, because this survey measures what direction investors feel the stock market will be in the next 6 months. And based on the latest figures, the gauge is in neutral territory, but tilting slightly more towards greedy than fearful. So that's a sign that maybe investors believe that the worst is behind us. And that's why it's ultimately suggesting that markets may have bottomed already. However, you might be surprised to learn that it's households and not companies nor Wall Street hedge funds that actually own most of the US stock market. And that makes them the gorilla in the room because according to Bank of America, the fact that this group of people hasn't yet sold off much of the almost $39 trillion of directly held equities means that this sign suggests that ultimately the markets haven't bottomed yet. And we have to see major outflows from households before the market is even close to bottoming, like what happened during the Great Financial Crisis, aka Great Recession. So this is a major sign also that makes it seem like markets have yet a ways to go before they might actually bottom. And a classic recession sign that has predicted most, if not all, U.S. recessions is the infamous inverted yield curve of U.S. Treasury bonds. And the media often cites the 2-year and 10-year Treasury bond as a suggested indicator of a looming recession. And even though the 3-month and 10-year Treasury bond yield curve is the more favored one to see if it inverts, most of the time people talk about the 2-year and 10-year, and that actually started inverting back in April 2022 for a brief time, and then it went back to the way it normally is, where normally you expect to get higher yields for longer dated bonds, but then this has consistently been inverted since July 6th. So the fact that the 2-year and 10-year inverted yield curve is flashing that a recession is either underway or could happen in the future, like the average amount of time it takes for a recession to start happening is about 6 months to 24 months after we have an inverted yield curve. So according to when it first flashed, the 2-year and 10-year, maybe that means that we could have one as soon as October 2022 or as far out as April 2024. But if we go by the 3-month and 10-year, that has not yet inverted, but it came really close to doing that on August 1st this year, where the gap narrowed to 0.04%, and the 3-month Treasury bond has been gaining a lot in yield. So the fact that that's also getting pretty close to inverting could be a sign that a recession is on the horizon. And even though that may not be a direct indicator of a bear market status in the stock market, usually bear markets accompany recession. So the fact that we might have had a technical recession underway with 2 subsequent GDP declines over the last 2 quarters means that we may already be in a recession, or the National Bureau of Economic Research research may decide that a recession could be defined at some other point in time when there are some other economic indicators that suggest we're really in a recession. So this sign, even though we could be in a recession and therefore a bear market, it may be that maybe we aren't having a bear market. So ultimately, this is a sign that no, the markets have not bottomed yet. And this technical trading indicator suggests that yes, markets have bottomed, and it's called a Fibonacci retracement, where the S&P 500 has retraced or recovered 50% of its fall from its January 3rd high of almost 4,800. And the fact that it needed to close above 4231 was what a lot of people were looking for. And it did that by closing at 4280 on August 12th. So this sign, which the Fibonacci sequence is a logarithmic spiral that occurs in nature, such as in nautilus shells and also in sunflowers, and it also occurs in human nature. So the fact that humans are very pattern-based suggests that maybe the markets have bottomed, and that's why some people were paying attention to the Fibonacci retracement here. Another indicator is the Volatility Index with ticker symbol VIX, and the more uncertainty or fear there is in the market, the higher this number goes, and the less fear there is, the lower the number is. And right now it's hovering at about 19 or 20, which is far below the peak levels we would need to see if the bear market was going to bottom out. And normally we would look for at least 45, and the highest we've gotten this year was 39 in January, and before that we had hit 41 in October 2021, and the highest we saw recently was 85 in March 2020 during the pandemic recession. So the fact that it's hovering between 20 and 30 throughout 2022 means that we haven't reached a climax of volatility, and that's why ultimately the markets may not have bottomed yet. Another technical indicator that suggests that yes, the markets have bottomed is when fewer than 20% of S&P 500 stocks are trading above their 200-day moving average. And we saw this happen between June 13 through July 22nd. And since then, it's been trading above the 20% mark. So as of August 12, it closed at almost 45% of S&P 500 stocks trading above the 200-day moving average, which means that peak pessimism had set in between June and July, and maybe the markets have bottomed. And in the following, I'm going to give you a combo of 3 no's and 1 yes in traditional market bottom indicators that I got from a Forbes article that cited Bank of America analysts. And even though they suggested that one of them is not a yes, I'm saying it's a yes from another Bank of America source suggesting that it is. And the 3 no's include how there would be rising unemployment, which we're not seeing that yet because we hit pre-pandemic levels of employment where unemployment was at 3.5% as of August 5. And then we would need to see a decline in the 2-year Treasury yield, which it's actually been on the rise, and it was at 3.25 on August 12. So that's also not really declining yet. And we would have to see the Federal Reserve cutting interest rates, and that might happen in 2023, but it's not happening yet. If anything, they're going to be hiking rates even more throughout the rest of 2022. So those are all the 3 no's. And the 1 yes is a slowdown in profit estimates, which means that there's expectations that profits will be lower. So that's the 1 yes, where analysts, even though they're not really adjusting their estimates as aggressively down yet, it's starting to happen. And sign number 11 is a contrarian indicator of a higher put to call ratio of trading volumes in options markets that would suggest that bearish expectations are on the rise, because we would then be seeing puts outnumbering calls significantly, and we would need to see the ratio go above 1.5, like when it hit around 1.8 in early 2020 and also in 2018 when markets were tumbling. And the fact that we're at a middle of the road rate where the total put to call ratio right now as of August 11 was only at 0.92 means that we're nowhere near a spike in fear, and therefore no, the markets have not bottomed yet based on this indicator. And finally, for signs 12 through 14, I've got 2 yeses that the market has bottomed and 1 no, not yet. And the first 2 yeses are because a lot of companies are flush with a lot of cash flow. That means that they could be doing a lot of stock buybacks or repurchases of their shares. And S&P 500 companies did 45% more stock buybacks in the first quarter this year compared to the year before. So that could be a market bottom indicator, as well as the fact that there's the highest level of short interest in the S&P 500 since the Corona sell-off of 2020, which is also another market bottom indicator. And then the only no here is that the S&P 500 bottomed back in early 2020 and Q4 2018 and after the dot-com bubble burst in 2002, and it had reached an S&P 500 forward price to earnings ratio of between 13 to 14 as the bottom before it recovered and went up from there. And it even went past below 13 in the 2008-2009 Great Recession, and that's when the markets bottomed last. So the fact that the S&P 500's forward PE ratio has not yet gone below 13 means that the markets may not have bottomed yet. And so across all of these signs, the total tally for no that the market has not bottomed yet comes out to 8 compared to the yeses coming out to 6 that the market has bottomed. So with 57% in favor of no compared to 43% in favor of yes, it looks like based on these various signs that maybe the market really hasn't bottomed yet, although there are some really compelling signs that indicate maybe the market has bottomed. So what do you think? Let me know in the comments if you think the stock market has bottomed and if we're in the beginning of a new bull market. I'd love to hear from you. And if you enjoyed this video or learned something, please like and subscribe. And I wish you well in getting through whatever the market throws at us and making money in the end. Till next time.